Okay. And we're back with aapl, Apple, NASDAQ. So when I started doing my Secretwars, revisiting Stan Weinstein's trading framework, relearning, because I had done it many years back, and trying to rehash how you enter, refining the buying process, where to set your sell stops, investor's way, the trader's way, and all that. Apple was my first ticker I used to go through that, and I'm re-looking at it now because some time has passed. Now I think I'm at a 53. This is gonna be my 54th episode for the Secretwars series, and I wanted to see how that evolved. And right now, let's check it out. We have
on the chart today under the moving
right here. Okay. Show me Apple. This is the monthly candle chart and 10-week moving average. 10-month moving average, simple moving average. Zoom. And right now, if I'd be doing this, my classic charting framework, there's 5-6 days left on the monthly candle. 1, 2, 3, 4, 5. I have a 5-month top, 6-month ongoing, and let me zoom in. Let's get some precision here. I'm checking the monthly because I consider that to be the wind, to confirm the direction of the wind. And after that, when we go on the smaller time frames, and you'll see if you cast yourselves in a downtrend direction, then if the winds were confirmed to be downtrend on the higher time frame, then you'll catch that in your cells. And that could help you if whipsaws do occur or pullbacks. Most likely you'll have a chance of surviving because you have the higher trend in your direction. So this is the way I would do it classically, or with my classic trading framework. Okay, here's the case for the bullish, for the upwards breakout. You close above 178 or 179 almost. Then I'd get a measure move upwards. Let's do it. And now you see let me center this even more. Try to put the price action where there's a black area on top all around. It's going to help you not be biased with how the chart looks. 190 would be the upwards target, and right now we're breaking down below the important support at 167. And if we have a monthly close below 167, the implied measure move on the monthly candle chart is 155. And you're all good. Usually I do my targets considerations, and right now I'm above that resistance right here, eventual support, sorry. So that's a nice plausible target to reach. All right, so now I know that I'm 1 week away from having a measured move downwards, a breakdown for aapl. Let's go on Stan Weinstein's ADX under 20, stage 1 or 3, and break above 20. That means the stock is trending, and when the ADX started going down, it means the stock is slowing down its trend, and you could kind of see it here that's slowing down the trend, that we're in a sideways move, either consolidation to a stage 4 breakdown, or just a consolidation into a stage 3 that's going to be a stage 2 continuation. Let's remove that. I look at the RSI to see if it goes from upwards above to through the halfway point downwards, and I use that as my confirmation for the Stan breakout or breakdown. Stan uses the Mansfield indicator, which is built on the stock versus its index, but my software doesn't offer me that, so I'm sticking with the RSI, the strength of the stock for itself, and it still gives me a good indication of the direction of where the stock is going. All right, let's look at that. There's a few things here. Let's imagine Stan never had the Ichimoku cloud. It's just a tool to help you identify areas of support and resistance to try to comply with Stan's criteria in his book, saying what you need. Okay, in this case, it's the breakdown for stage 4 breakdown. You need to have a close below a horizontal trend line, below the 30-week moving average, and the A++ setups don't have any overhead or under on near important support. That's where the cloud comes in. But there's no talk of the cloud, the Ichimoku cloud, in Stan's book. He probably the support, maybe I don't know how he clearly identified it, maybe just by experience. And I know right now that if there's a breakdown from these, like I know that there's support right here at the 155 level. There's some more support here at the 150 level. Let's stretch that out. And there's more. The final support is right here. So remember this on the monthly candle. These are my targets. On the weekly, the resistance and support lines are different. They're usually higher and lower, because on the monthly, this is considered noise. The monthly rejected this as the strongest level of support or resistance. Here, right here, all this is noise. This is a wick. So if we go back on the monthly and we look where I drew these X's, let's go back. You see, that's that long wick. Oh no, breakdown. Well, monthly candle close above the 167 level. That was just considered noise. That's where you get whipsawed. That's where you get trapped. That you don't wait for the monthly candle close to confirm the breakdown or breakout. And then price action gets sucked back in, and then you get whipsawed to hell in this ranging. It continues to range left to right. And these are months. So 1 month, 2 months, and then you're just stuck. Price action whipsaw exaggerates to the upside. Get triggered out or take a big loss if you didn't have any risk money management. And then the price action sucks back in. And then the wick is just the casualties of war. So whenever you see a wick on a larger time frame, imagine that on that smaller time frame, there's some casualties of war right there. And let's go back on a 5-year weekly candle chart as Stan does it. And bear with me, I'm going to remove the Ichimoku cloud. Let's explode that. Okay. So now I have a bunch of lines. Let's remove the legend. If I be playing at this on the weekly and in the Stan framework, the 155 level would be my support of that top formation. Or even here. Stan maybe could have used this one here. The 165. So on the weekly candle chart, Stan could have said that this pattern right here, this would be the breakdown pattern. Okay, let's remove all those monthly. Hide legend. remove all trend lines. Okay. Let me explode that. There we go. Now it could work. This is the monthly. There you go. Okay, 155. So this would be, let's say we use a swing rule. This could be the measured move on that weekly candle breakdown. If we have a close below 155, we're below 30-week moving average. If we could get RSI or the massive indicator going from over halfway territories going downwards, if we can get an accompanying red candle with 4 times the average of the previous 4 weeks. Stan doesn't use the volume. He says volume isn't always there on downtrends. Fear accumulates and just explodes downwards, and sometimes you could go, you have a crash on light volume. But I've noticed that on breakdowns, I do have higher volume on those red candles. On the breakdown candles, there's more volume. And on the pullbacks, if they're healthy, I have light volume on those green candles. And every time there's a move down, it's on heavy red candles. So I still look at that to confirm for that extra confirmation. I look at the monthly for a monthly candle close below breakdown line. And then I know that I'm ready to go. So that's how I would have done it even before I knew anything about Ichimoku clouds, before Isa Trader on stageanalysis.net said that he used that to avoid whipsaws. I'd have my alerts here at 155, and that is all she wrote. Stage 4 breakdown, imminent. But wait, could I have a stage 4 breakdown, but are we really going to play it? Here is the cloud. So the cloud is, if you're above the green, you're in an uptrend. If you're below the red, you're in a downtrend. Right now, we're clearly in a stage 3. Price action on multiple occasions has gone below 30-week moving average. And right now, you should be out of aapl if you played bullish upwards. 1, 2, 3, 4. You could have had multiple occasions to 1, 2, 3, 4. If you could have exited here on the trendline violation if you had drew this one, and after that you could have the remainder of your position sold when you triggered out here on this on the 30-week moving average trend line. So right now, that's stage 2, you're out. Stan, when you get triggered out on trend lines, and I've noticed over and over, on that 4th break, Stan uses 3 points on his trend line. I know in technical analysis, 2 points is sufficient. And then the 3rd one, it's a break. Stan wants 3 points touched, and then the 4th one a break. I've noticed most often you have a sideways move. These are weekly candles, and you're just in a choppy land here. There's no use getting there. Take your profits, reset your alerts after the chart has morphed, added candles, and then if there's a continuation breakout, so be it. You could get back in. You could move your risk and play another stock somewhere else. It's just exploding in stage 2. Or stage 4 breakdown is just starting. Don't get attached to the stock. Who cares? Apples, oranges, or whatever. And that's what I have to say. Reduce that emotion. Get out. Respect this training, the framework. And right now, you just see it's choppy. If you stayed in there, you just go crazy. So right now, it's morphing as a top. Okay, Ichimoku cloud. Let's say there's a breakdown here below 155. Here's my candle. This is support. This is support that was generated here on the way up, projected forward. And unless maybe we hit here and the price action goes up and more time moves on, and maybe eventually we're going to break a little later, and then that 155, it'd be awesome. It'd be awesome breakout. I'd actually like to see that. Because right now, if there's a breakdown, I don't want to enter until I'm way below here. So if we'd have tomorrow or in a few days, see how it moves. This is the candle. The support's all the way down here, 134. Not super duper, very far away. But as time moves on, support moves up, up. And the further in time we go, the more of that support evaporates, and the higher and higher the breakout line. And that's how you have to wait. It forces you to be patient. Don't get in early. Don't it's gonna crash. I don't want to miss. Get some resistance here. Could pull back up. Let time, and just tell yourself there's either other stocks or either case. Usually there's a pullback. So if there's a breakdown, and then after that you could pull back here on low volume, and then after that go back down, and then you could enter a little later on. Always make sure though you're out of the cloud, and then after that you've put the chances on your side. So that's a post for Apple. It's in a stage 3, 155. Put that alert there. That's your breakdown that's your breakdown line. And you could always set an alert 180 for the breakout, not the breakdown. And remember, on the monthly candle chart, we have a breakdown in progress. So if we get to keep the close below, if we stay below 167 on the monthly candle chart, it's a breakdown right there. With the measured move, did I do it again? With the measured move all the way down here to, look at all these lines, to 156. Breakdown on the monthly candle in progress. Wait for the monthly candle close to confirm. And stand, unfortunately or fortunately, Ichimoku cloud. I use it. I'm going to wait until I'm through the cloud. And who knows, it could bounce back up and come back down. But a lot of these NASDAQ stocks, we've built a nice run up. We have nice support projected in the future. I'm starting to see them. BABA could do that maybe tomorrow as a stock. They're all starting to look like that. So they have some support. Don't get greedy on the breakdown. But this is going to churn for a little while, and we might see some consolidation between those two ranges and eventual breakdown. Or else maybe just consolidation and go upwards. Who knows? Just be ready for both scenarios, guys. All right, Apple. I set my alerts. See ya soon. Ciao.